Hey, thanks for watching. We're coming to you from Fool Global Headquarters in Alexandria, Virginia. I'm Chris Hill, here with senior analysts Shannon Jones and Emily Flippen. Thanks for being here.
Hey, glad to be here.
We're talking marijuana stocks for 2020. We're going to be taking your questions in just a few minutes. We also have got a couple of stocks for your watch list, and we've got a report for you. It's free if you're interested. Go to fool.com/MJ. It's our marijuana investing playbook. Everything you need to know, plus a few stocks to get you started. Emily, let me start with you. We were actually in this studio back in June of last year. So much enthusiasm for this industry. And I think I would just say broadly, stocks across the industry higher back in June. Maybe the pullback in stock prices that we've seen was to be expected, but when you think about the last 8 or 9 months or so in this industry, what do you think about?
So there's a lot that was expected, and I think oversupply in Canada, for instance, has been one of those things that a lot of analysts expected when they looked at the cannabis industry. The kind of lack of retail stores in Canada as well, also keeping a lot of the major Canadian producers limited, but that's also been hitting a lot of the US producers as well. And there's so many different reasons, a lot of them predictable, a lot of them unpredictable. Obviously with the vaping crisis that really hit the industry, the tepid response from the FDA regarding CBD regulations has also been keeping the industry down. And more recently, we've seen a lot of financial trouble, even with firms here in the US. Lots of turnover in the management suites, lots of CEOs being kicked out, and cash reserves that won't keep companies alive for more than a quarter or two. So there's been a lot of bad things happening in the industry. But overall, I think it's a great time to be interested in cannabis companies because the valuations that we're seeing today are so much lower than when we met last June.
Yeah, and I would say to that, there was a lot of bad in 2019. Like, let's just be real. But I think there were a lot of positives. And Emily and I, particularly last year, like, a lot of it was not surprising. But for some of the good stuff we did see, of course, in October, we then had the derivatives legalization in Canada. Of course, with that, though, there's always that time delay between, yes, this is now a law, and now you can start to see products on the shelf. We really didn't start to see that until the end of December, so even the impact of that, we're still waiting to see. But I think leading up to that, you started to see really kind of the good companies rise to the top and the really bad ones sink and really some even implode. I'm thinking of like CanTrust. That was probably the most notable implosion. They were the company that basically was illegally growing marijuana in unlicensed rooms. And so we started to hear a lot of that, but I mean, there was a lot of bad, but there was some good, and I think has really set up 2020 to be really interesting.
Well, and again, when you look back and you think about all the stock prices that came down, I mean, to your point, that can shake out a lot of the bad companies, the more solid, the more promising companies that are set up for success over the next decade or so. They're probably in better shape. And to your point, Emily, more attractively priced. There are a few different ways to invest into the marijuana industry. Let's get into those. And I guess the most obvious, Emily, is just the pure play companies.
Yeah, it's what people think about when they think about cannabis company. Pure play cannabis companies are the companies that are growing and retailing cannabis, a lot of them in countries like Canada, but a lot of them here in the US, so in California, Colorado, Washington, these types of states have very strong recreational markets. So there's lots of different ways to play in the pure play industry, but these are the riskiest ways to play in the cannabis industries. There's lots of other areas that you can get involved in. If you think that, you know, the people who are actually growing and selling are too risky for me, that's fine. They're not for everyone. I do think there are interesting opportunities in the space right now. But if that's not for you, there are safer ways to play the cannabis industry.
Yeah, and I think I would even add, when it comes to pure play companies, it's risky because, I mean, really, they're throwing all of their eggs into one basket. And when we saw a lot of the hype of early 2019, it was for a lot of these large Canadian LPs, these licensed producers, who were pretty much just focused on the growing end. And so, really, pure play is extremely risky, but then you also have your picks and shovels companies that are not reliant solely on the plant, but they're doing things to help either with the supply chain or the companies in general, whether it be operations or something like that. These, of course, come with less risk because they are not basically fronting the load of everything that's been happening in the industry, but is also another way to play. But there's also another one.
Yeah, and those are ancillary companies. They're companies that have strong core businesses that aren't involved in the marijuana industry, but still offer some upside. So the company that we talked about last time we met last June is still a company that I think we're all big fans of. That's Constellation Brands. They have a strong beer, wine, liquor business, but they also own a lot of Canopy Growth, which is one of the largest producers in Canada for cannabis. So they offer good upside there, but they also recognize that while it is a big investment of theirs, obviously in Canopy Growth, it's a business that's not nearly as volatile as owning Canopy Growth itself.
It's interesting. You mentioned Constellation Brands. You think back to 2019, there were businesses, incredibly well-known, large, stable businesses like Coca-Cola and Pepsi that were name-checked as thinking about investing in this space. And it is one of those things that I think validates this industry. For all of the stocks that have dropped, it feels like there's still a lot of enthusiasm because there's still a lot of promise to the growth of this industry, no pun intended. And I think part of it is you've got these large companies that aren't directly involved. They're not the pure plays, but at any given moment when they feel like the time is right, they can go in and start investing, whether it's buying companies outright or, as we've seen in the food and beverage space, look to put CBD in.
Yeah, and I'm so glad you brought that up because I think the infused beverages, which is also a part of this Cannabis 2.0 with derivatives, has been a heavily watched space. We talked about Constellation Brands. Canopy actually just came out in January, I believe it was, and said they actually have to delay production of these infused beverages because they needed to build out their line. And I think there's still some concerns about how do you, at scale, build these infused beverages and really keep it shelf stable. And so we're starting to see, of course, there's innovation trying to get the onset, the offset right, but also can this be on a shelf and can we produce it at scale? Still a lot of questions, still very early on when it comes to the beverage space. Really, the entire space is still very early on, but still very exciting.
I'm actually really excited about the beverage space. It's something that a lot of people say maybe I'm over-enthusiastic for it because I think it's a space that can be easily overhyped, but I don't want to downplay the importance of cannabis-based beverages. As you alluded to, Shannon, it's extremely challenging to get a shelf-stable THC-infused beverage that's the same consistency from sip to sip. And one company that I really like, a pure play company that's doing that well or is attempting to do that well, is Organigram. Ticker OGI. It's a really interesting Canadian producer. It's a smaller producer. They have a really low cost of production, but one of the things that they're innovating with is producing essentially flavor adders that you can add THC infused, almost like you get Gatorade pouches.
It's like a little powder.
Yeah, powder, there you go, that's the word I was looking for. And you add them to any beverage you want, and that makes the experience a lot more predictable, a lot more stable for the end consumer, and saves them from a lot of the issues that we've been seeing with companies that are trying to get them into these aluminum cans, which are not the best way to consume your beverages. And we also see provinces like Ontario looking into lounges where people can consume cannabis-based beverages legally in an open space the same way they do alcohol. We're still a way off from that in terms of regulation, but it's a great opportunity for the cannabis industry.
And Emily, too, I want to talk a little bit about Ontario because really, if you are an investor in this space, this is a province you want to watch. This is, I believe, the most populated province in all of Canada. And so for Ontario, there were a lot of concerns just about access to product, and that was something that we saw in 2019. I think it was something like maybe 24 retail locations for 40% of Canada's population, which is just crazy to me, but that's because they were using a licensing lottery system. They finally came back, said, okay, we're going to go to a regular licensing system. This could really open up the door if more retail locations bring greater access to the population for products just like that.
We're going to get to your questions in just a couple of minutes, so hang in there. We'll also have a couple of stocks for your watch list. Let me ask sort of like a nuts and bolts question for investors out there, because particularly when we're dealing with, this can happen across any industry, but particularly newer industries. You have some investors looking at whether it's a pure play or a picks and shovel type of company. They look at a smaller company and they think in terms of they might get bought, whether it's a Constellation Brands or a Coca-Cola or someone else. Is that a way that people should be looking at the marijuana industry, or is that actually a contrary indicator where if that's your number one reason for buying a company, you should move on?
I'm not going to say that there aren't interesting opportunities with acquisition targets in general and investing. Cannabis is not going to be one of those spaces, at least not for 2020. We saw a lot of potential deals come out in 2019. The vast majority of them fell through. Valuations on these companies got hammered, and ultimately companies aren't looking to spend as much money to buy cannabis companies as they once were. That's probably a good thing, but I would not pick up a lot of these very small companies with market caps under 150 million or so, with the assumption that they're going to get bought. The finances of most of these companies is such that they're much more likely to simply go under than be purchased.
Yeah. And I would even add, I think you should approach the entire industry the way you would any other. You want to look at the business. You want to look at leadership. You want to look at the financials. Do they have a sustainable business model? You want to evaluate it the same way you would. So to basically build your thesis around a potential acquisition, and this is true for the cannabis space, this is true for biopharmaceutical companies. I would never recommend doing that because 9 times out of 10, it won't happen, and usually, even if it looks like it might happen, it's usually just a rumor.
All right, let's get to a couple of stocks that people can put on their watch list if they're looking to build out their portfolio and in particular invest in marijuana. What do you think, Emily?
I'll start with a company that's an ancillary company first, because I think it's important for investors to look, remind themselves that they are interested in investing in cannabis. There are options that aren't just pure play cannabis companies that you may not be thinking about. One of those companies is Chart Industries. Chart Industries is a really interesting company. It's a manufacturer of equipment for the energy and industrial industries. So it's not something that you'd think about when you think about a cannabis company. It has a strong underlying business, but they've seen a boon recently because of the cannabis industry. So a lot of their equipment is actually great for extracting CO2, which is important in the process of turning cannabis into usable substances like CBD or like stuff that you may put in a vape pen. So this is an interesting company. I think it's undervalued when you look at cannabis companies in general. They did report earnings this morning. It was a risky company to bring to this live stream. While they missed on, I think, expectations, the stock's up as a result. And it's a really interesting company. They said that their good results were a response to trailers, LNG fueling stations, cryogenic equipment, and cannabis. So got all your bases covered there.
Yeah, and this is a really interesting company to keep an eye on, especially as an under the radar play. Emily was talking about CO2 extraction. This is just one of really a handful of ways to extract oils from the cannabis plant, but with CO2 extraction, this is actually more of the preferred method. It's a lot safer than some of the chemical-based solvents, which can be toxic. And so at the right temperature, at the right pressure, you can actually have a really, really good end product, and you can vary it based on the different products, some of the derivative products that we were talking about. And so I could see this company, it's still very, very early on for them. I think they've really just kind of recently recognized the opportunity here. But I think in terms of what they can do and what they can offer, they've been in this business, particularly when it comes to supplying this type of equipment to food manufacturers, biomedical companies. They know how to do this at scale. And really, for a lot of these companies, that's what they're looking for. How can I build my processes, build my production line at scale? I think they've got equipment to do that. They've been around. And so for me, this is one of the safer opportunities, potentially.
All right, before we move on to viewer questions, one more stock for people's watch list.
I'd be remiss if I didn't throw out a pure play company, and a company that I really like in the pure play space. I already mentioned Organigram, it's a great company, but Green Thumb Industries. Green Thumb Industries is a US-based cannabis producer and supplier. I like the US side right now because I think there's a lot of opportunities with US vertically integrated multi-state operators. That is Green Thumb Industries. We had the opportunity to sit down with their CEO, Ben Kovler. Really interesting guy, really smart guy. More importantly, he's running the company so that they're focused on the end stakeholder. They're based out of Chicago, Illinois. Illinois just legalized recreational cannabis in the state, and they have an extremely robust program to play upon Illinois' social equity program. I mean, what they're doing is they're helping people who have been disadvantaged by the cannabis industry in the past. These are people who have been imprisoned or had family members imprisoned for cannabis issues, and helping them get some of these licenses in the state, build up their businesses, and they're taking nothing for it. So they're doing the right thing because it's the right thing to do. So always look for those companies that are run really well. I think Green Thumb is run very well, not to mention they have a very strong balance sheet. So they have strong cash that's going to keep them afloat for at least the next year without needing to tap equity markets, and they're operating cash flow positive. So that's even better.
Yeah, we will absolutely take that in this industry. Just to add, this is a company that is growing pretty aggressively. We talked about the Illinois market, which is really one of the bigger markets to watch in 2020. But they went from 14 stores at the end of 2018 to, by the end of January of this year, their 41st retail store. So they are growing really aggressively, but they're growing in the right areas. Also in Nevada, they've picked up licenses thanks to an acquisition. They're also in Florida's medical marijuana market, which is another huge market outside of California that you definitely want to be watching. And even in New Jersey, where it's really hard to get these licenses, they've been able to attain that as well. All told, they have 90 retail licenses in 12 states, and they hold another 55 to build out and expand. So I love the multi-state operators. Emily and I have talked about them a lot. You've got some that are truly multi-state aggregators. You're just buying up all the licenses you can. But then you have really well-run, well-efficient multi-state operators that you definitely want to keep an eye on, and Green Thumb Industries is definitely that.
All right, if you're looking for more information, you can check out our free investing playbook for marijuana. Just go to fool.com/MJ. And as always, if you're enjoying the video, please give us a thumbs up. It helps other people find the videos, and we like doing these. Let's get to the questions that are coming in. We talked a little bit about the environment here in the U.S. Nyla asks, what are legal implications for investing in stocks that operate in a space that is still federally illegal in the United States?
Oh, it's a loaded question because there are so many things to consider. You can invest in CBD companies here in the U.S. I think the most popular one is probably Charlotte's Web. Their business is legal from the standpoint of topicals, but we're already seeing issues with selling any sort of dietary supplement with CBD here in the U.S., so just be aware of that legal risk if you're investing in CBD companies here in the U.S. There are states where marijuana is legal both recreationally and medicinally. You can look at companies that are operating in those states. Unfortunately, because it is illegal at a federal level, a lot of the US-based companies cannot list on the major exchanges, but you can go to the over-the-counter markets, OTC, where you can find a lot of these companies. I would not worry too much, unless maybe you're a federal government employee, I wouldn't worry too much about the implications of buying the companies. I would just worry more about the risks that are associated with owning a company, owning a share of a company or shares of a company that are operating in an environment that is less than friendly in some areas.
Yeah, and I can say, I mean, that really goes right now for this entire space. There's so much, I think, legal and regulatory uncertainty in this space. And I mean, on the CBD front, Emily talked about it. I mean, we're still trying to figure out, can this be marketed as a dietary supplement or is this an actual drug? So there's going to be risk if you are investing in the space no matter what, especially until we get, hopefully one day, federal legalization to happen. But until then, just know there's always going to be some risk. But to Emily's point, I wouldn't be too concerned about, day-to-day legal risk to yourself with this.
One viewer asked, you mentioned management departures with some of these companies. How do you look at executives in the industry? It seems like the folks calling the shots are particularly important in a new industry like cannabis. I agree with that.
Yeah, I'll start off. So for me, I love to see executives that have come from other places, from other industries. So the marijuana industry really is starting to pivot into more of a consumer packaged goods type of industry. So when I see executives come on board that come from companies like Kellogg or something like that, I have more confidence. And if I can see that they have a track record and that I can trust them. I think more than anything right now, investors, for us, we're looking for management teams that we can trust. So that means, are you transparent and open about things that are happening, whether it be good or bad? How do you respond to things that do happen that are bad? But also, do you have good corporate governance? And I know for Emily, this is something she's very passionate about, but really from a leadership perspective, you really want to make sure that you evaluate them really, again, like no other industry, you want to evaluate them on the same level and just make sure that they're bringing something to the table.
And you can always check insider ownership. It's great when you have CEOs of companies, especially if it's a company that they co-founded, that still own a lot of the company. That means that they benefit when the stock price goes up, and you obviously benefit when that happens too, if you own shares of the company. I would be wary of co-founders that have sold off their company, that are involved in making decisions, but have very little to lose from the stock price going down. I would encourage anybody, before they invest in a company, listen to an interview with the CEO. If you can't sit down and meet with them, and I don't think most people can, listen to them, because I think most people have good radars and they can understand when someone is a salesperson trying to sell something and when someone's legitimately trying to grow a good business and an interesting industry.
Mohammed asks, what is your take on Aurora Cannabis? Is it a buy, sell, or hold? For those unfamiliar, the Canadian marijuana producer.
Go ahead.
I'm so sorry, Shannon. I have very strong opinions about Aurora Cannabis. Aurora Cannabis.
Why do you think we have you to be here today?
Aurora Cannabis is one of those companies that continuously gets brought up in the media. It's a company that is owned a lot on apps like Robinhood, which I think tells you a lot about the people who are unfortunately buying this company. Aurora Cannabis has been a dumpster fire for a long time. They have over 1 billion shares issued. That means a lot of shareholder dilution. If you buy 5 shares of Aurora, you should think about it as owning 5 shares of a company. If Aurora continues to issue shares to raise money, that means that 5 shares that you own becomes less and less and less. Aurora is going to have to put up amazing results to make the more than 1 billion shares worth something. Not to mention their finances have been a disaster for a long time. Their cash won't last them the next quarter or two, and there's been management turnover. So there's a lot to dislike about Aurora. I would ignore the people trying to pump the stock and look towards better run companies like we mentioned, OGI, Organigram, and Green Thumb only being 2 of those.
I'm so glad that someone asked about Aurora, only because I think I was on the show with you maybe at Market Foolery maybe over a year ago, and this was one company I stayed away from, and we've got so many comments and emails. Why didn't you talk about this company? It's because I didn't like them then, and I still don't like them now. This is a company that's going through a lot. Even their production capacity has been dramatically reduced. So again, to all the points Emily said, I totally agree. Avoid the hype. I think especially when you have a brand new industry and you see a lot of attention being thrown, sometimes that's my red flag, or it makes me want to dig a little bit deeper. Aurora is a perfect example of that.
Oh, you just answered the next question, which was Jerry asking, are there any stocks you're prepared to say people should avoid? So consider that box checked. Stuart asks, are there ETFs that you like for investing in marijuana? It seems like a good way to get invested without betting on one business. I'll just mention that in the report that we've got at fool.com/MJ, there are some ETFs in there, so worth checking out.
Yeah, there is the ETF. I believe the ticker symbol is MJ, but it's the Harvest ETF. That's a good option, oftentimes quoted. I know I look at it from time to time, but that is a potentially good way if you are not ready to go all in on one of these stocks or even start like a starter position. Sometimes an ETF is the best way to get started.
I'm a little bit more hesitant with ETFs because ETFs tend to be market cap weighted. That means that they buy more shares of the biggest companies, less shares of the smallest companies, which when we see like over the past year when we talked back in June, a lot of the bigger companies have much higher market caps. And as a result, these ETFs buy a lot of shares of them. When they eventually come down, that ends up hurting investors. I think if you're a long-term investor, an ETF, an MJ ETF is fine to hold. You have to be aware that you're not trying to time that. So you're not trying to get in on it now, wait 3 weeks, sell some, buy some more. That's not the best way to play this market. If you are going to buy an ETF, what I would recommend doing is buying, forgetting you own it, and then check back in 3 to 5 years.
And I think that brings up a good point too for people that are just getting started in this industry. None of these companies, and even if you do an ETF, should be a large portion of your portfolio. This should really be the section of your portfolio that is for the highest risk, most aggressive portion. And of course, that percentage is going to be different depending on your own personal circumstances. But recognize this is such a hugely volatile space that if you cannot withstand, share prices dropping 50% overnight, you probably don't need to own it, or at least you need to cut back significantly. So make it a very small part of your portfolio and make sure it can pass the sleep well at night test.
A question from JR who asked, it seems like a lot of these are recreational marketplace. Do you have any medical marijuana stocks that you're watching?
So one that has been, of course, on the radar is GW Pharmaceuticals, GWPH. This was the company that really landed the first FDA approval for a drug called Epidiolex, and it was for very severe seizures in children. I like this company and I love that they were able to get that first FDA approval, but their revenue has actually been decelerating sequentially quarter over quarter. And that's really, I think, it's not the only drug that they have in their portfolio. They also have a drug called Sativex. But for GW Pharmaceuticals, for me, I need to see more happen with their pipeline. They've got some other indications apart from epilepsy that they're studying their drug in. And right now, I think the closest competitor, Zogenix, for one of their indications, just put out some pretty poor data, which certainly works in their favor. But I would want to see more. I know that they're going into another indication, another 40 to 80,000 patient opportunity. And so I would just want to see more and, of course, see revenue turn the other direction before I would say yes to that. But definitely a company to watch in the pharmaceutical space.
And I'll add TrueLeaf to that list. Florida is one of the bigger medical markets here in the U.S., and TrueLeaf has for a long time now been the #1 player in the Florida market. We've never recommended it here because we've had some hesitancies about an issue regarding this husband of the CEO. We don't think that ultimately TrueLeaf did anything wrong, and there's a short report that came after them that was pretty hilariously egregious. So I won't spend too much time touching on that. It was a good laugh on a Friday morning. But we do have some legal concerns regarding that company, plus declining market share could be an issue. But it's actually, when you're looking at the medical market, Florida is a really interesting market to look at. TrueLeaf is everywhere in Florida. If you have any friends that live in the area, definitely ask them. I promise you they're familiar.
And I mean, they are a very cost-efficient company. They've been very prudent with just how they've been expanding. And you mentioned having that huge market share in Florida. They've been trying to build and replicate the same model in other states. I think there's still a lot of question marks as to whether or not they can do it, especially when you have these competitors that have already got that first mover advantage. So I like TrueLeaf, and I think there's a lot to watch here. But again, still some question marks.
A couple people asking, what are some of the big industry-specific metrics that investors should be keeping an eye on with marijuana stocks?
Yeah, I wish there could be some standardized industry metrics. We're not there yet. Every company is reporting essentially what they want to report, and there's a lot of adjusted EBITDA. We're seeing adjusted EBITDA not just in the cannabis market, but everywhere, and a lot of companies are guiding towards positive adjusted EBITDA. What I would do is I would compare their operating losses, their cash flow from operations, which is usually negative for a lot of these companies, to their net income. If you see a company that claims to be profitable but is burning more cash in operating cash flow than they are showing on their income statement, that to me is a big red flag. You also want to look at shareholder dilution. So when I think about metrics, I think about how many shares do they have? How are they raising money? Is it through more share issuances? And if they are they raising revenues at a rate higher than at which they're issuing new shares? And also, how much cash do they have on their balance sheet? How much cash are they burning in operating cash flow each quarter? And how long will that cash last them before they're needing to tap debt or equity markets?
Yeah, and I think one of the big things, especially with the, I guess, heartache and the heartburn that we saw the past year, is like, what are your costs? Especially if you're a grower, you're a producer, what are the costs per gram? Obviously, you want to see that low, just so that they can have some healthy margins. But I mean, if you're looking at growers, definitely want to see lower cost, and that they're going after methods that will drive costs lower over time too.
A couple of viewers were asking about dilution, and it's interesting to me that, and maybe it's a sign of how young this industry is, that you don't really hear a lot about activist investors. There are a lot of troubled companies with some troubled balance sheets. The activist investors aren't really moving into these companies like they are in other spaces.
I have two thoughts on that. First being, we're kind of seeing an activist investor in the form of Constellation Brands with their control over Canopy Growth, replacing Canopy Growth's CEO with their previous CFO. So big moves there in terms of changing up the management suite with their own ownership. But I would also remind people that I mentioned a lot about shareholder dilution, that is important, but look at debt structure. Cushco is a really interesting picks and shovels play, but the way that company has raised money has been by issuing debt. And they have tier 1 liens on every single asset that company owns, which essentially means if they ever run out of money, equity holders aren't getting anything. Those debt holders are going to get every penny of that company, and they just got a new auditor. So there's issues with issuing equity. There's also issues with issuing debt.
Last question from David, who asks, what do you think about NWave? It seems like there's a ton of opportunity there, but the stock has really struggled. NWave, that's a picks and shovel play, isn't it?
It is, and it's so funny that's a great question. We were just talking with one of our producers who had purchased NWave and was telling us, asking the same thing, what happened with NWave? NWave has been caught up in the overarching cannabis meltdown. Yeah, so we like the business. I think it's an interesting picks and shovels play. NWave is a dehydrator of cannabis, for anyone who's not familiar with that company. They have some really lucrative agreements across the world. They give exclusive rights to their patented technology to speed up the drying time of cannabis exponentially. So it's an interesting company. I like it. I still think it's underappreciated in the market.
Yes, and I think they're still growing. They're also the makers of Moon Cheese, for those of you that have that. But they're still growing. But ultimately, this is a company, as I was mentioning, about driving down the cost. When you can speed up the drying cycle, that's exactly what you want. And this is a company that is helping to do that. So yeah, I'd say NWave is just coming down with the broader industry, but long term, I mean, with all the contracts, with all the licensing opportunities out there, that's a really interesting one.
All right, Shannon Jones, Emily Flippen, thanks for being here.
Yeah, thanks for having us.
Thanks everyone for watching. We really appreciate it. Thanks for the thumbs up. And again, go to fool.com/MJ for that free marijuana investing playbook. I'm Chris Hill. Thanks for watching. We'll see you next time.
I've got $1 million, it's hypothetical. Large amount in my bank account, it's parenthetical. The money I'm made of is theoretical, so in theory I've got it good. My fat wallet is on a diet.